Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
So I almost did a emergency pod Friday afternoon on the news that the DOJ investigation into Powell was over. But it wasn't really moving markets, and I thought we'll get to it on Tuesday. So here we are talking about it on the Tuesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories of the day that are moving mortgage rates, unless I'm sick, on vacation, or it's a Azalea Festival. Other than that, I'm here, knocking it out. And like I said, I almost did an emergency pod on Friday afternoon. Story broke right around, I think it was like 11, 12 o'clock, somewhere around there. And I was like, oh my gosh. But then it didn't really move markets. So I was like, we'll wait. And here we are. So yeah, the big story, and luckily nothing else has really happened. It is going to be a busy week. We are going to talk about that. A lot of central bank decisions. And there's not supposed to be any changes to rates. The question is, how are their economies reacting to the oil shock? Because remember, the last time we had a lot of central banks talking, it was right after the Iran war had started. And there was reference to it, but a lot of it was we'll wait and see. And so now we've been seeing. And so now we're waiting to hear what they think and how they've analyzed the data. So that's going to be happening this week. We're going to get to that in a little bit. But it is a big week, mostly because now we know for sure, unless something crazy happens, this will be Jerome Powell's last meeting as Fed chair. Now, it might not be his last meeting. He could be on there as just a regular board member and will stay on, which he has not said anything to the contrary that he's leaving or not. So he could be the next meeting, but this will most likely, like 99.9% chance, this will be his last meeting as Fed chair. So his last press conference will be this week. And this is, of course, because of the announcement that was made on Friday. The Department of Justice announced that it was ending the criminal investigation into the Federal Reserve and more specifically, the Federal Reserve Chairman, Jerome Powell. U.S. Attorney Jeanine Pirro announced that the probe would be closed, shifting oversight to the Fed's Inspector General. Saying, quote, this morning, the Inspector General for the Federal Reserve has been asked to scrutinize the building cost overruns. Now, she did make sure to note that if something does pop up, they could refile or, reopen the investigation. But as of right now, it is closed. And so that means that the one holdout vote on the Senate Banking Committee, Thom Tillis, who's made it very clear what he would need in order for him to vote for Kevin Warsh, had nothing to do with Kevin Warsh at all. It was this investigation. Tillis has been, since this investigation was announced, I think it was the night this investigation, I think it was like a Sunday night, announcement comes out, and then we get the video from Powell. And I think almost right away, Tillis is like, we're not going to allow another Fed chair to take over with this kind of pressure. And then Lisa Murkowski sort of was backing what Tillis was doing. However, she never said whether or not she would vote. And of course, Tillis's vote mattered because he's on the Senate Banking Committee. This was just about the overall vote. The Republicans, Trump, can lose 2 votes to Republicans and still be fine. There's a 53-47. So they lose, they can lose up to, I think they can lose 3 votes, and then J.D. Vance could be the tiebreaker. And so we thought maybe 2, but 51 still gives them enough votes. And so this was really about moving Warsh out of committee. And so Thom Tillis likes what he hears. And over the weekend, he was on NBC's Meet the Press. And he said that he was ready to move forward with the key first committee vote on Warsh, telling Meet the Press, quote, they, being Justice Department, they've made it very clear that the current investigation is completely and fully ended. Talking about his conversations with the Justice Department, the senator said those discussions gave him the assurance he needed to, quote, feel like they were not using the DOJ as a weapon to threaten the independence of the Fed. So he now feels comfortable, so he can now move forward with his vote, which means Warsh gets out of committee, goes to the Senate floor, and like I said, looks like the Republicans have enough votes in order for Warsh to become the next Fed chair. So Jerome Powell will not have to stay on as pro tem. But like I said, he could stay on as just a regular board member. Peter Conti Brown of Wharton has a Substack, and he talked about this decision. He said, it seems that Tillis has won. U.S. Attorney Jeanine Pirro announced she will close the investigation into the Federal Reserve. He said, I hope that U.S. Attorney Pirro notes well that the facts didn't warrant a criminal investigation in the first place. That's likely not to happen. This caveat is not the closure with, quote, the transparency and finality that Powell required and that I had hoped to see. But I'm willing to admit victory for Tillis and those of us who have been cheering him on. My thinking is this. This is, once again, Conti Brown. No one is better situated than Jay Powell himself to assess his legal peril that he faces. Because in this instance, his peril is all of our peril. Powell and his lawyers are best situated to understand what is coming after Pirro's announcement. And Conti Brown argued, my strong sense, not informed by any relevant private conversations to be fair, is that Tillis would not have announced that he desisted from his blockade without having first talked to Powell. This suggests to me the best sense is that Pirro's announcement is a face-saving effort that provides the closure we need, not necessarily in that, there's no more closure coming. And so he's saying, listen, Pirro didn't go too far in saying the investigation was over, but couldn't do that because you got to save face to some extent. And so it's like, we could reopen the investigation, but his argument seems to be that Tillis has probably talked to Powell. Powell's probably talked to some people involved, and it feels like this is over. And let's hope it is. And let's actually worry about the Fed and kind of what's going to be happening going forward because they have a lot. There's a lot going on. And the big question is what's going to happen with regards to rate cuts. We all know President. Now, what's interesting is let's not forget recently President Trump had said that he was not necessarily arguing for more Fed cuts. Ray Dalio, though, of course, was on CNBC today, or I should say Monday because it's Tuesday, right? It's Tuesday edition. Billionaire investor Ray Dalio warned the U.S. economy has slipped into a stagflationary environment. He told CNBC, quote, we are certainly in a stagflationary period because of the issues that are here in terms of a more immediate inflation and farther from the target. Certainly you would not cut interest rates now, Dalio said. You will lose your credibility. The Federal Reserve would lose its credibility, particularly now. If you look at monetary policies by other countries, you're not going to see them cutting. In fact, there's actually been talks about possibly a rate increase in Europe and England and other places that are facing much bigger oil shocks than us. So whatever your benchmarks are, you're not going to be inclined to cut, not with today's information. Now, also, later this week, we are going to be getting some GDP data. First look at the first quarter. And so that'll give us a better idea if we're in this stagflationary environment that Ray Dalio was talking about. Of course, stagflation, something that people didn't even think was possible, which is you have almost no growth, but inflation. I don't know where, in all honesty, I mean, listen, I'm not going to say, I know more than Ray Dalio. I mean, he's a smart dude. I don't really understand his argument. I mean, I get the concern about inflation, but I don't really understand his argument about stagflation. Once again, is inflation with no economic growth. I mean, there was a piece today in the Wall Street Journal about how earnings are supposed to be great for the first quarter. There's a lot of good reports coming out, and the stock market makes sense. So, I mean, clearly we're seeing growth. We're seeing productivity gains. I don't know. I'm not sure where the no growth that is necessary for stagflation. I get the inflation. I get the concerns about inflation. I mean, there's no doubt about that. I mean, we are seeing inflation rise domestically and internationally, but the growth thing I don't really get. So I'm not entirely sure about that. Now, once again, just because, stock market's doing great and we're hearing great things from, earnings and everything else doesn't mean that people are feeling great. And there was a report that kind of got lost in everything that was going on Friday heading into the weekend. Like I said, with the Department of Justice, that was the big issue everyone was talking about. But on Friday, we got a University of Michigan consumer sentiment report, and it was pretty bad. Now, it was up from the preliminary report. So if you watch the Michigan report, you get a preliminary report earlier in the month, and then you get kind of the finalized version later in the month. So we're getting the finalized version. And the latest survey from the University of Michigan showed that consumer sentiment was at 49.8. Now, that was slightly above the preliminary reading of 47.6, but was the lowest level since they've been recording since 1952. So almost 75 years. And like I said, it kind of got lost in the shuffle because it's not a huge report. It's not like the conference board report, which we'll be getting. I think we're getting that later. Yeah, we're getting that later this week. That's looked at a little bit more prestige and gets a little bit more attention. However, the Michigan report had confidence continuing to deteriorate, with the index falling 3.5 points from the prior month and is now comparable to the lows that we saw in June 2022. Declines were broad-based, cutting across all political affiliation, income levels, age groups, and education. Inflation being one of the big concerns. Year-ahead inflation expectations jumped to 4.7% from 3.8%, marking the largest monthly increase since April of last year, when we had the Liberation Day and all the tariffs put on things, which understandably people were thinking was going to cause prices to rise. Longer-term expectations also climbed, rising to 3.5%, the highest level since October 2025. So, like I said, this kind of got lost in the shuffle, but it was like, oh, man, people are not feeling. So, once again, I get Ray Dalio's point about inflation. I just don't get the no growth aspect. That I'm a little. Now, I get there's certain parts of the economy we might not see growth in, but it looks like overall growth. And we'll have a better idea of that later this week. We will be getting some GDP data. That is coming out, let's see, Thursday. All right, so Monday, nothing. Well, actually, take that back. Later Monday, not in time for this podcast, Bank of Japan inflation will be out. So that'll be out in the morning newsletter, but I didn't have it while I'm doing this podcast right now, which is important. As I always point out, Japan is the largest foreign holder of U.S. debt. What's happening over there with regards to inflation and bond rates will impact our treasury market. No doubt about that. So always important to keep an eye on what's happening with Japan's inflation. On Tuesday, we're getting some home price data, Case-Shiller, FHFA, and consumer confidence, like we just talked about. We'll see if this matches the Michigan report that was not great. Then Wednesday is the big day. Almost brings a little tear to my eye. Jerome Powell's last meeting as Fed chair, assuming Warsh gets confirmed, which it looks like he definitely will be. So 2 o'clock, as always, we will be getting the rate decision, which they are supposed to hold rates. And then we'll get the press conference, his last press conference. And Warsh might not do press conferences. He made it very clear that, maybe there needs to be less communication from the Fed. So we will see. I'll probably maybe do one, but we'll see if he continues the tradition of Powell's press conferences after the rate decision. Earlier in the day, we'll be getting building permit and housing starts for both February and March, still catching up with the shutdown that we saw last year. Then Thursday, we're getting inflation is expected to rise 2.9% in Europe, which will then be followed by a rate decision from the European Central Bank. They're expected to hold rates, and the Bank of England is also supposed to hold rates Both those decisions coming early, probably around 9, 10 a.m. on Thursday. We'll also get first estimate for GDP, first quarter economic growth. They are projecting 1.5% growth, which is not bad. Once again, Ray Dalio saying we're in stagflation environment. That number would have to be 0. Consumer prices, according to PCE, are expected to rise 0.6%, pushing inflation to 3.3%. Personal spending and income are both expected to rise 0.4%. And then jobless claims, slight rise, 219,000. And then on Friday, manufacturing is expected to fall slightly. So a lot of central bank data. And once again, it's not the decisions they're making because, they're expected to all pretty much hold rates where they are. It's what their thinking is about the current situation, the oil shocks, what's happening in the Middle East, how that's impacting their economies, and what's going to happen with rates and inflation. So keep an eye on not so much the decisions, but what they have to say about the decisions. So unlike last week, we got a lot to look forward to this week. Oh, and by the way, rates today, I haven't even mentioned them. The 10-year was actually up about 3 basis points. We're now at the highest level since April 7th. So we fell, and then we've slightly been climbing for about the last about week. Just slowly, a little bit, like 2 basis points, 3 basis points, 2 basis points, 1 basis point. And now we're at the highest level, like I said, since April 7th. Mortgage News Daily, though, had once again another day of no movement in their 30-year fixed index with rates at 6.32%. So even though the 10-year has been slowly climbing, we have not seen a lot of change in the 30-year fixed, according to Mortgage News Daily, which could mean that we're maybe seeing the spread tighten a little bit. So even though the 10-year is rising, it's not impacting mortgage rates yet. That can always change, unfortunately. But all right, we're a little longer today. A lot to get to. Big decision. Department of Justice ending their investigation. You guys enjoy your Tuesday. It's going to be a busy week. Get ready. A lot of central bank data. Could be some big movers in rates. We will see. So enjoy. Hope you enjoyed Monday's kind of lull. Because I got a feeling things are going to be... There's going to be a lot of news. We'll see if it moves rates or not. We will see. Enjoy Tuesday. We'll be back here Wednesday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.